going live.
Okay, perfect.
That's great. Thanks very much for your help.
Okay.
And are you going to be doing the Q&A later as well?
Yes, I'll be asking the questions for you off of the comments on YouTube.
Okay,
If
brilliant.
that's all right with you.
That's absolutely perfect. I'll leave around 20 to 15 minutes at the end.
Okay, perfect.
For Q&A. Great. That's great. Thanks very much for your help.
Okay, thank you.
Later as well.
Yes, I'll be asking the questions for you off of the comments on YouTube.
Okay, brilliant.
Okay.
Okay, so we'll, for anyone who's just dialed in to the YouTube, thanks for joining. We're going to wait a couple of minutes, wait for everyone to get on the line, and our third panelist will be joining us shortly as well. Hi, Jessica.
Hi, sorry I couldn't make the pre-meet.
Not at all. Thank you so much
No
for joining.
problem.
We are live on YouTube, I should say, but we're waiting a couple of minutes just for everyone to dial in. So thanks so much. It's 5 o'clock. We'll get started. Thank you everyone for joining us. Delighted to be here. This is a GAIN panel discussion in partnership with the Edinburgh Futures Conference. So we're pleased that so many students are able to join us. For those of you who don't know, GAIN, Girls Are Investors, is a charity with the objective of increasing diversity in the investment world. And we strive to do that by inspiring and informing the next generation of investors, and in particular, encouraging more young women to apply for investment decision-making roles. I'm Charlotte Young. I'm happy to be moderating this evening. I'm one of the co-founders of GAIN by night, and by day, I am a fund manager at Troy Asset Management. And the way that GAIN aims to inspire that next generation is through an amazing network of incredibly talented female investors who give up their time incredibly generously to speaking in events like this. We do lots of panel discussions in universities as well as talks in schools, just to get out there and explain what the job is and why we love it. And so on that note, with our incredible panel lineup this evening, we've got a stellar group of women who are all leaders in the world of responsible investing. We're very grateful to have you here. Thank you for joining. I'll just introduce briefly each of you, but I'd love to go on to ask you about what your responsibilities are, who you invest for, and what types of investments you look at. So we've got from Capital Group, delighted to have Jessica Ground, who is Global Head of ESG, having previously been Head of Stewardship at Schroders with over 20 years there. So thank you, Jessica, for joining us. It's brilliant to have you. Orly Arav is a GAIN regular. Thank you, Orly, for joining this panel discussion. We're very, very pleased to have you here as well. Orly is an investment specialist in the world of impact and development, and is a managing director at Lion's Head Global Partners. And thank you very much for being on the panel this evening. And last but not least, Honor Fell, who is head of sustainable investment at Cambridge Endowment, previously at Reddington, and has been a huge supporter of GAIN since the very beginning. So since GAIN started a year and a half ago, Honor appears in videos on our website, which you can find gainuk.org, with lots more information about investing and inspirational role models like the women we have here this evening. So thank you very much for joining. Our topic this evening is responsible investing, and this is a women's leadership conference, so I think it's very suitable that we have some of the most impressive leaders in that world of responsible investing here. I just want to start, we'll have sort of 3 sections to this evening. The first, a little bit about how you got into the world of responsible investing specifically and what your responsibilities are. The second part, we'll talk a little bit about the responsible investment landscape, how it's evolving, how it's changed, and what your opinions are and where we're going. And finally, we will have time for some Q&A, which will include advice and tips for young people looking to get into investment and particularly interested in responsible investment. So if we could just start with you, Jessica, if that's all right. Love to hear about your role, particularly I know it's a new role, what you do at Capital Group.
Great. Yeah. So after 23 really happy years at Schroders, I've recently jumped ship to join at Capital Group. And my background, I should stress, is as a fundamental investment analyst and as a portfolio manager, which I did for 20 years. And then 2 things really sort of drove me into thinking about responsible investment and why it might be more important. The first is that in after the wake of the financial crisis, I'm sure a lot of the people here can't even remember that. I think there were quite rightly a lot of questions that were asking about the role of companies in broader society, and the role of asset managers and asset owners. And I'd been really involved in the crisis. I spent a lot of time with the banks. I went and gave evidence to Parliament about some of the failures in governance that I'd seen. And I think the first thing it struck me is that companies don't exist in a vacuum, and that one of the most interesting things is the role that asset managers can play in challenging them and holding them to account and getting them to change their behavior. I think the other thing that really interested me and caused me to sort of take my investment career in that decision is, pretty much a lot of what I do is sort of what I would call beyond spreadsheet analysis. So, when I first started up in Edinburgh as an intern for a great firm called Martin Currie, I looked pretty clever because I could use Excel, and some of the fund managers I was working for couldn't. And so I was, good at building balance sheets and forecasting profits. I think now what's so interesting is if I look at those same balance sheets, almost 75% of those comes from intangible assets, things like how well are you running your people? How happy are your customers? And those things are becoming more and more important. And the data on them is growing. But the investment industry hasn't become very adept at how they harness that data to understand. So as well as our role of challenging companies and getting them to improve performance, to me it felt like the next big thing in investing is how we could harness this data to ask better questions and do better analysis. A lot of it's unstructured. So it sounds like, one hand, a lot of people think, oh, it was moving to some kind of a do-gooding, but a lot of it was bringing that rigors that I'd had as a more conventional analyst to just solving these different questions. And I also think there are questions that women think about more. I would observe that a great example is, a lot of my peers seemed really surprised by the levels of online shopping penetration. In some markets, they've never really been shopping. And so when it comes to that broader fundamental analysis and ESG analysis, I think the insights that we bring as being out there in society are additionally powerful. Sorry, I've got a long way in answering your question, but very much grounded on investment, about harnessing the future, and then about holding companies to account as well.
Brilliant. And I hope we talk more about that later as well. Absolutely crucial. And Orly, could you just give a brief overview of what you do, what types of investments you look at, and who you do it for?
Yeah, so I'm Orly Alav. I've spent the last 17 years investing in Africa, so my markets are a bit more challenging than some of maybe my colleagues here on this panel, and a lot of things that we take for granted in developed market, you need to actually figure out how you replace them or substitute for in the emerging market. So when I started my career in Africa, and maybe just I was beforehand I was mainly an advisor of project finance in PwC, and beforehand I used to do a lot of big data. So numbers have always been my big friend. And I love crunching numbers and trying to think what they tell us. And I love the comment that you make, Jessica, about the Excel is only one small part of it, because the numbers help us to maybe to organize the data, but then what you make out of it, it's all a lot of common sense and open your eyes and think of outside the box. So I think this is very important as a characteristic for anyone who looks at investment. You really need to be curious and trying to figure out what does it tell me, but what also it doesn't tell me, and what do I need to look for. So to be honest, when I started my African career, all I wanted is to come and work in the UK in project finance, and there was this obscure fund that was looking for somebody. And at that time, it was hard to find people for project finance for Africa. And I was very, very lucky. And I always say I'm the luckiest, probably one of the luckiest people in the world who got a job that today I love. And I've been doing now for 17 years. And this is kind of my third home is Africa. So sometimes it's also luck, and not be too fussy and say, okay, I'll go and try it. And that's what I told myself. I'll try the job. It sounds interesting, even though on numbers side, it was a $300 million fund. So it was a bit of a joke when you come from a developed market. And 3 months later, I fell in love with the job, with the people, and the mission, because that's, I think, the other part we're talking about here, the impact investment or the development. And when you go to places where there's no water, there's no energy, there's nothing, and you're actually make a very small dent in making it happen, it's just the best thing I can think about. And wherever I go to these countries now, I can look and say, oh, this is the thing I help funding, and some people have a better life out of it. So I think for me, it's making a difference wherever you can.
Great, thanks, Polly. And Honor, if we could hear a bit about your role, particularly your newly appointed role as Sustainable Officer at Cambridge Endowment.
Sure, thank you, Charlotte. So I work for Cambridge Investment Management Limited, which is the company that manages the Cambridge Endowment Fund. And that's a fund which is £3.5 billion of investments, and its investments and our purpose really is to support the university and the colleges and various charitable trusts that are associated with the university. So to give you an idea of what that means, in 2019 we paid out about £115 million, which supported in the region of 800 different teaching, research and other activities across the university. So we're a very long-term asset owner. We expect to be here in perpetuity, and our mission is to deliver that world-class investment performance, which will continue to support all of those fantastic research and teaching activities, but to do that in a sustainable way. And that's one of the really exciting reasons that I joined the team and the fund, is that we're trying to think about, as a long-term asset owner, how can we invest in a way that's consistent with a really long-term view of society and the environment, and how we should all act to get the best outcomes. In terms of what I'm doing day to day, a little bit different to the other people on the call. We invest via other third-party fund managers. So we're going out and partnering with fund managers in lots of different asset classes, public equity, private equity, hedge funds, and fixed income. And so a lot of my time is spent talking to those people and trying to understand, how do they think about environmental, social and governance issues when they're making decisions about which assets to buy or to sell, and how to talk to company management or to government in order to influence behaviours.
Great, thank you. And I guess before we get into the meat of the top of the subject matter, I'd be interested, Jessica, you mentioned your first job in Edinburgh. Would love to hear kind of how you got there, why you decided to apply for a job in investing, and what kind of drew you to it in particular. Oh, I think you're on mute.
Sorry, it's about the second time I've done that today. So I was really lucky after I was actually at Bristol. So after my first year at Bristol, I spent time in Hong Kong helping a family friend set up a headhunting firm. And I got a great oversight into all the different roles that there were out there in financial services. And I was really drawn to asset management because I was a historian by training, and there was that great opportunity to analyze things, to do research, and to come up with your own theories of what had happened and what could happen in the future, which anybody who sat there in a history lecture will recognize, and having to defend your views. And also my backdrop, I'd been reasonably numerate, and it seemed a great way of marrying those two things. And I always think it's really important, though, to go out and try a job. I thought I'd wanted to be a lawyer until I spent a week in a law firm. And then I realized the lovely things that all my colleagues were getting really excited about, like proofreading documents, just wasn't doing it for me. So I was really lucky to get a summer internship up up in Scotland. I would say I was rejected for summer internship by Schroders and then had 23 really happy years there. So that's lesson one. Don't get discouraged. It can be hard, and you have to do it, and you have to do it again and again. So, you know, having that, you know, just those chances, you know, I know internships are incredibly hard to get. But you know, however you can get that experience, you know, while you're a student, even if it's a short thing, to be able to, you know, practically see if you enjoy it, and you know, see if you can have impact as well. And that was one of the things that I loved about it, that in quite a short time, as I mentioned, because I could use Excel, you know, I was building these company models. I was looking at emerging market companies where you got limited financial disclosure, and being able to have an impact by sort of building up cash flow statements for them was, unlike proofreading documents, I found that really interesting. And again, I think, you know, just following your instincts, you know, trying in whatever way to see if you really enjoy doing that. And I think that's what some of the other speakers have spoken to. And, you know, having that passion, because, you know, work is a huge part of your life, and you really have to enjoy it and get excited about it. And I think the final thing as well that was really important in my journey, was I felt that it was going to be a career that I could combine with having a family, because you are paid for the results that you generate, and that to me was very transparent. You know, and another thing didn't appeal to me about the law firm is it seemed to be very much correlated with the hours that you put in. So I had some naive idea that I could work smarter and it would all be very easy.
Yeah, that's great. The meritocratic aspects of the job, you can't dispute. That's brilliant. Anna, I know we spoke about this earlier. Interested in whether you always wanted to get into investment.
No, not at all. And I read geography at university, and investment wasn't something that was particularly on my radar. It's not something that anyone in my family had ever done. And I wasn't particularly sure what career I wanted to go into. The reason that my interest was sort of sparked was I did a course in the last year of my degree, where we were looking at London and the city of London and the rise and fall of the power of the area. And it was really a kind of big part of that, which I found very interesting, was the power of investors. And I never really understood before this concept that companies need funding, often in order to carry out their activities or to grow. And that was a bit of a light bulb moment for me. And I thought, okay, well, that sounds like a very interesting area that I don't know much about. And so I went on the careers website and tried to find internships, as Jessica said, and then eventually I found a job which I fell into in a way, and I didn't know at that point that responsible investment was a career either. And so that's something that's really developed after I got onto the grad scheme of an investment consultant. I think because of my background in geography, I was always really interested in people and place and the impact of our activities on the environment. And so that was something I was always personally interested in trying to bring into my job. And over time, I'm very lucky that it has evolved into being my day-to-day.
Great. And Orly, what about responsible investing in particular drew you to your current role? Oh, sorry, you're on mute.
The fund I currently manage is only investing in renewable energy in Africa, so that's I think quite responsible by the investment policy. And I think but it doesn't end there at doing only renewable energy, but we also look obviously at the environmental, social, and we ask our clients to abide by the IFC performance standards, which is the kind of highest level for in the market for investment on how to make sure that the environmental social governance are followed. And obviously we also look at how these projects are awarded. We try to make sure there's no corruption or other reputation risks that needs to be taken into account. So as I said before, it's always like a little jigsaw that you need to put together with pieces of information on, is this project making sense? Are the sponsors know what they're doing? How did they get to do this project? Do they know how to perform all the procedures, or how they follow the right procedures that we want? And all of this comes together to a nice paper that's presented to an investment committee to say yay or nay.
Great. And I think we'll move into talking about responsible investing in a little bit more detail. Jessica, love to hear from you what you think investors' role is as one of many stakeholders. How important are we in terms of actually driving outcomes leading to a more sustainable world?
Yeah, that's a great question, and I think you've already seen it so much in the answers that have been given. This idea of capital allocation, of using money to fund growth, hopefully really inclusive growth to solve the challenges that we've just been hearing more about, of electricity provision in Africa, or kind of more prosaic growth around is it roads or railways. Capital allocation is hugely important, and even for something like a company where we an equity, something on the stock market that's floated, where it's what's called permanent capital, the fact that we are owners. So it's very powerful. If anything, if you look at it, it's going to become more important. Last time I checked, governments spend quite a lot of money on COVID. They might have less levers to pull, and so thinking about what we want to fund and the type of businesses that we want to fund, or how we can transform some of the existing industries that we don't think have a long-term future in the likes of climate change, but we might still have investments, is really important. And I think the other thing that's really excited about, and Orly sort of touched on it, is we're starting to, with the rise of big data and some of the things we're starting to better understand this type of impacts that we can have. So if I look on my sphere in sort of listed equity, there's there are obvious things that we can look at. So, looking at the amount of carbon that companies are emitting, encouraging them to reduce that, but also in areas like looking at where they're lobbying, types of practices that they might be having, adopting more responsible practices. Supply chain is another area where we've done huge work on. And getting them to transition. So we can start to sort of track impact that we might have, not just with capital allocation, but improving behaviors in the companies that we're in, and also in other areas like job creation. So we're almost at the tip of the iceberg at fully understanding both the positive impacts that companies can have, and also, as already been noted on, the negative impacts. And some of the things that we're kind of pulling on with data are really exciting, but always building. I don't want people to think it's really terrifying. It's always very much built on the common sense interactions that you might be seeing, in your everyday. There's a lot to be said for that.
Great, and you mentioned sort of positives and negatives there. Anna, I'd be really interested to hear your view, having looked at so many different ways to invest. You look at lots of different fund managers. What are the main types of responsible investing that we should be aware of as a newcomer to the industry?
Good question, and I think actually there's a useful blog piece on the GAIN website, which I think will help with the answer to this question as well, if anyone's looking for a bit more information after the talk. But I think I just kind of briefly take you through a little chart that's on there, which is the Bridges spectrum of capital, which I think is really helpful when you're trying to understand the different approaches to responsible investment. And that just starts at one side, the left-hand side, with the traditional approach, which is based only on financial metrics. I think it's going back to Jessica's introduction, that was maybe in the past when people were looking purely at financial metrics. Over time, they've started to think more about these intangibles and how can we put a value on environmental, social and governance issues, and that kind of integration be called responsible investment. And if you move kind of further across the spectrum to sustainable investment, that's where actually the person investing the money is really starting to think very thematically about what are the headwinds and tailwinds which companies might be facing in coming years, and how can I position my investments alongside those sustainability trends. And then the final one, which I'll mention, which Ollie's already been talking a lot about, is impact investing. And that's where, as an investor, you invest with a purpose to create change and to have a really positive outcome on an issue that you've identified in advance of making that investment. And that's the area where we're seeing people starting to make market rate returns as well as have an impact. But also at the most extreme end, we start to cross into more of a philanthropic type approach, where you could start to prioritize impact over investment returns. That's a really quick summary. And I think just to conclude on that, there's some important levers to think about as well. So there's some different kind of approaches that fund managers can take. They can either use really rules-based screening to implement their approach they can come up with. They can use a more flexible approach, integrating all of the information at their fingertips. Or they can also, and that helps them to make the buy or sell decision. And then the third thing that I'll mention, which we've already touched on briefly, is engagement. So once you're invested, how do you then talk to the key people to make sure that the assets are being managed in an appropriate way for the long term?
I wanted to jump in for a second, if possible, regarding the impact investment spectrum. And I think if we look at investment, and I always say, you start with the word investment, you want something in return. It can be only impact, it can be financial returns in the other side, the other one only impact. But you want to make sure, no matter what the return you want to make, that the process that you're following has certain logic that will make sure that the investment is sustainable. And for me, this is the most important word. Because even if I give a grant for 1 year, and then at the end of the year, this institution cannot sustain itself or cannot get other grants, then I throw my money up to hell. And this is not a good way to invest. So it doesn't matter for me the return, or even how do you want to make that contribution of funding. It's very important to understand what is the next step after I've made my investment. And what is this continuum of available funds, or what is the resources that I will have, or do I need to build a management team? And it can be for 20% return and can be for 0% return. In my personal view, when we want to really give grants, it's where honors area makes sense, because that's when we create public goods. These ones have a return, but we don't really measure it by one. So if you want to create research, or you want to have scholars, or you want to have a think tank, you will want to make grants because this is a public good. You also still need to think whether this organization, if it's not one grantee who does a research, how long they can sustain themselves, or who will be the next grant giver. So I just want to make sure that, when we talk about this, so there's a lot of jargon and people say, grant, we don't care how, we just look at the organization. It's not true, because if we want to have sustainable impact, and we want impact, we also want to make sure that even any money we give, no matter how, makes the right impact.
That's great. I think really important to acknowledge that. Jessica, I'd be really interested to hear your view, and a lot of people will say, and Honor has also touched on this, that there is a sort of trade-off where you either invest responsibly, and that's kind of, it could be at the philanthropic end, or you sort of invest for financial return. And you touched on this, that actually a lot of ESG is potentially additive to return. But I'm just interested in your view on actually how responsible investing can also be compatible with making money.
Yeah, I think, sorry, I'm a historian, so I'm going to go back to the history on this. I think, you know, a lot of sort of what I would call not your mother's responsible investment used to be all about what you would exclude. And certainly, while in the investment management industry, we sometimes talk about costs in different ways. Certainly, you know, depending on what you excluded or how much you're excluding of the possible things that you could invest in, there could be costs in terms of either more volatility, so you were starting to take more risk against a benchmark, against a reference portfolio, or sort of from having a narrow opportunity set, or you might have had naturally fewer exposures to different part of the market. I think what's really exciting and what we're talking about now is almost like sort of responsible investment 2.0. So one of them is, you know, what a lot of what I drive through, which is this idea of ESG integration and then improving corporate performance, so that hopefully by this much more holistic view of how companies are operating, not just in financial terms, but across environmental, social terms and how they're run, you genuinely are identifying the best businesses, and that where you might be finding risk, you might be eliminating over time. You know, Honor's touched on this idea of thematic investments as well, and again, that can be a great way to make money. You know, in terms of what are the mega trends of the future, what are the companies that are really going to have a great growth runway to sustainably harness them. And then we start to go, and then you know, we've talked as well about impact investing, and again, you know, I think you know, I think like all these things, for personally, my personal views on impact investments is that most of the investors I speak to who really want to make impact investment are very conscious about the returns that they want to make relative to the impact and where they sit on that. But they definitely are interested in returns, because as we've already touched on, that can actually be part about what makes it a sustainable business in terms of viable business. But to them, as important might be some of the non-financial outcomes that you generate, because actually under some analysis, they see them as having a wider benefit that in a way can be financial value accruing to other areas. So I think it's all about, you know, just not seeing responsible investment in this sort of narrow way that maybe historically people did, but realizing that it's evolving. You know, even in that whistle-stop store, I haven't touched on everything like best in class. And you know, the new ways are very much aligned with helping people meet financial objectives at the same time.
And that makes sustainable investing more sustainable. So I think that's definitely good news.
Exactly. We've all got teams to pay and things like that.
Great. Orly, I know we've discussed this in a previous panel, but I wondered if you could give an example of an investment that you've made which has sort of done good as well as making money for your investing clients.
Well, I think all the investments we've done in the infrastructure space in Africa have done pretty good for the investors, and the impact is tremendous. I'll take one example. I'll talk about two examples, but one, I think it's the pioneering mobile telephony 15 years ago, and I wanted to show how market changed. So in 15 years ago, the fund when I left, I was the managing director of the Emerging Africa Infrastructure Fund, funded a company called Celtel, which was this very small mobile operator in Africa, and nobody wanted to lend them money. And even our investment committee, who was supposed to be expert on Africa, said to us, nobody will use a mobile phone in Africa, are you crazy? 15 years later, I don't want to say how many millions and billions of mobile phones there are in Africa. And actually new inventions come from Africa, like mobile payments that we now started to use in the UK was invented in Kenya by a DFID grant, talking about grants and supporting innovation. And that investment was the best returns we ever received on a loan, because we had some warrants and in a company. And the guy, who is called Mo Ibrahim, and he's famous in Africa for his foundation and the work he's done, he said that when in his early days, nobody wanted to fund him. Obviously, when he was successful, everybody wanted to fund him. And I think the lesson is here, sometimes you really need to try and take a leap of faith based on a lot of data and information and understanding, and back some of these innovation, because otherwise things don't happen. I think that's an interesting story. I think one of my cutest investment is an Uber for tractor. So that one is in India, and it's a company that actually you have an app and you can call a tractor to come and plow a small piece of field. And if you think about it, when you have one field, it's very expensive to own your own tractor, so you can't afford it. But if you have somebody who come and plow your field, that's exactly what you need. So I think that's one of the cutest things I've done.
Great, I love that investment. And Honor, I'd love to hear about the ways that you touched on this earlier, that investors can influence outcomes, and in particular how they can drive better behaviour from corporates, ways to engage, vote. What are the best tools do you think that investors have at their disposal?
Sure. So I think, as we kind of touched on, there's two really big tools. There's the ability to invest or withdraw your investment from a company, and there's also the ability, once you're investing with that company, to engage with them. And so something that we spend a lot of time talking about and talking to our fund managers about is how do they build up those relationships over the long term. How do they, we're partnering with managers for the long term, and also our managers tend to be partnering with companies for the long term as well. And so they've got a chance kind of in that initial investment to do lots of work and understand the company, and also to talk to them, particularly in the private equity space. They might be talking to them in a lot of detail before the investment is made, about the plans that the company has going forwards, and potentially giving them feedback. But that also will happen in the public space to an extent as well. And then once you're invested with a company, kind of on an ongoing basis, making sure that at an annual meeting, you're there participating, bringing to the fore any kind of key questions about climate change or any social issues that might have come up in the year. Talking to our managers at the moment about things like COVID and how they're treating their employees during this time, and how they're interacting, how they're making sure that their human capital is protected within their workforce, and what that means for them longer term, for example. And I think everyone else on the call probably also have some really interesting insights and observations on that front.
Yeah, Jessica, we'd love to hear your perspective on that as well. I know you're on the board of Investor Forum, which we're at Troy, we're members of, interested in how that drives better outcomes.
Yeah, definitely. I think so. The Investor Forum that I work on is particularly powerful because that is all about collective or collaborative engagement. So, as powerful as one shareholder can be, the number of times I sat in management teams and said, well, young lady, you're the only one who's got this view, or the only one who's being pesky. The power of collaboration, working with other investors to really push for change, and whether that is as something as sort of working with a bank on their who they're lending to, and how they're going to sort of maybe pivot away towards tapping more green finance, to working with companies on things like succession planning, or pivoting, some of the more pure kind of, when a strategy has failed, how they should assess that. So, one of the great things about engagements and these dialogues is sometimes a lot of finance can feel very abstract. We've all talked about big data and spreadsheets and things like that, but this is really where again, a lot of women excel in. You've got that relationship, you've got that negotiation, and again, you are genuinely trying to do it because you think it is going to get a better outcome for your clients. So don't worry, it's not all, again, I think a lot of women are put off finance because I think it's all going to be sitting behind crunching numbers. We all obviously have talked about how we're doing that, but there's a lot of relationship building, pushing, and then hopefully achieving something at the end of that.
Great, thank you. And Paulie, I know we've spoken about sort of the way that investing looks today and how sustainability has many different guises. What do you think is the future for responsible investing? What do you think we'll see in the next few years?
Well, I think there's a huge amount of money chasing responsible investment. And I recently read an article about green bonds, which is kind of one of this new sexy asset class. And the demand versus the supply is just huge gap. And I think we will see much more demand also from the clients themselves. The people who give you the money to manage will say, we actually want to see responsible investments. This is a huge change, I think, in this generation investors compared to previous generations. I do think there is a gap of providing the right assets. So I think there is a way to start thinking how we create these assets, because otherwise you have 3 assets, the prices are inflated, or everybody said, okay, there's no assets, let's find a new asset class. So I do think this is actually COVID is a time to start thinking about the society at whole and different roles that are played by different parts, and how to potentially reinvest to find the right investment that are more sustainable, more green, and which I think the demand, or at least the recognition that this is the right way, because we can see what happened with no travels, unfortunately. I'm not sure that we needed that experiment, but we got it. So we can see the impact on the environment when you actually are confined not to use or to emit CO2 as normal.
Yeah, it's definitely made very clear that we can have a huge impact by changing behaviour. And as we sort of draw to the last 20 odd minutes of this panel, I'd just like to get a bit more into the kind of practical day-to-day reality of this job, and also answer any questions from the audience, give advice and tips that might be useful for young students looking to get into the industry, and in particular into responsible investing. Anna, it would be great to hear from you, just to give a flavour of what it's like in your role on a day-to-day basis. I know that probably today versus prior to COVID, there's a bit of a difference, but would love to hear your typical day in life.
Sure. So, I mean, there are some differences, clearly, but probably not as many as there could be. The main one is it's harder to get out and about, and there's a bit less travel. But otherwise, a lot of the things that I do are relatively similar. And I probably got very few days that look the same. And I think that's one of the great things about this job is responsible investment is continually evolving, and there's always something new to look at. I spend probably the beginning of my day checking up on news and my emails, seeing if there's anything interesting that's come up that I should be picking up on. And then the rest of my time is probably split kind of half and half between doing more kind of strategic and portfolio level work, looking across all of our asset managers and deciding what direction we want to take the portfolio in going forward. And the other 50% is interacting more one-on-one with individual asset managers, understanding what's in their portfolio, how are they thinking about sustainability issues, and how are they engaging on any issues that they perceive. So that's kind of at a very high level how my day would break down. And in terms of then what sort of skills do you need for that, I think Jessica's kind of already drawn out this in really well, that quite a generalist skill set can be very helpful. And the people can excel in this field who are extremely numerate. People can excel who are very good at just kind of reading and writing, and often it's a combination of both that you need. And so I wouldn't say that I'm fantastic at either. I've just got a bit of both. So that stands me in reasonable stead. And then I think the most important thing has been just to be willing to ask lots of questions of the people around me, and to always keep learning and enjoy what you're learning.
Great, that's really helpful advice. And Jessica, what would you say is the best part about your job?
I think that the best part about my job is the breadth of what you're doing. So, you know, it really is from everything about thinking about quantitative factors and how we might build a back test, to thinking about how can we use web scrape data to form this view on how happy company employees are, to meeting a client, to helping them think about, they've got these sort of thoughts about responsible investment, how does that transfer into an outcome, to building a team is something else I really love, and working with people, coaching them, to kind of thinking about innovative areas of research that we might want to go and find out more about, and meeting a company. This job is so great because it is such a privilege. You're constantly challenged on an intellectual point of view. You're meeting with people who are constantly challenging you. And literally, you do not clock watch. And I think that is such a great gift. And in fact, you spend most of your time thinking, how are you going to do everything you do? Yeah, of course, in your career, at the beginning of your career, there is some boring stuff that you have to slog through, and but really, when you think about it, the fact that there's such a wide variety, you're really find answers to difficult questions. It's great.
Brilliant. You definitely sold it. And we have actually a question from one of the students. Lydia is asking, and I'm going to pose this to you, Orly. What are the most exciting, but also the most challenging aspects of your work?
Well, I think exciting is definitely going to different places and new places, and I've been traveling almost every month before Corona for the last 15 years, if not twice a month, and meeting new people, new culture, or even going to the same country but seeing a different angle of clients or projects, and it's just constant exploration. I sometimes feel like more an explorer than a financer person. And actually, my first time I went to Rwanda, I met one of my colleagues from the World Bank, and he saw me at the airport and then saw me at the hotel. We never met. So he looked at me and said, "Oh, you're the person for the finance." I said, "Yes." I said, "I thought you were a backpacker," because I obviously were traveling very with my jeans and t-shirt, and I didn't think I need to do anything else. So I do feel that in one part of my job, I have this experience of a backpacker, maybe in a different environment, but so that's fascinating and the thing I love. So it's challenging because there's a lot of bits and pieces that you need to figure out. The information is not out there. You also deal with project that takes years, so you need to be very patient, and you kind of have, especially what I do, one of my projects took 8 years from zero to end. So it's a lot of patience, it's a lot of perseverance, and kind of continue, plow on, and don't get desperate that it doesn't work. A lot of, it's easy to see the problems, but the more important is to try and see the solutions. And I enjoy it. I like these riddles. I always say this, for me, it's like a riddle and a puzzle that I need to try and solve. But it can be frustrating sometimes. And you need to find a way to kind of say, okay, let's leave it, come back to it tomorrow, or talk to somebody and try and find solution. Well, there are solutions. It's just, we need to be thinking about them, and sometimes I will not be happy when I can't find a solution. So don't get me wrong, I'm not smiling every day.
Yeah, and I suppose that's the sort of crux of responsible investing, is working out how we can make a change and find solutions to a lot of these problems. Anna, I wanted to ask you, because you've been a huge supporter of GAIN, and the reason we exist is that lots of young women, for some reason, don't currently apply to the industry. We have a majority of non-female applicants to investment management roles. And I wondered what you think might be some of the misconceptions that people have about investing that puts them off, and what you would say to those women who aren't applying.
Mm-hmm. I can see everyone else smiling as well, so I'm sure they're going to chip in. But I think that there certainly are some big well, I think actually just a lack of awareness is one of the first big things. This is not necessarily one of the obvious career paths that people understand. And I think sometimes, particularly I noticed at university, some of my female peer group wanted to know exactly what career that they were going to go into. And so a lot of people going into to be lawyers or to be doctors, and that was a sort of career path that they felt they understood in a bit more detail, and investment was this big unknown to them. So I think one thing I'd say is that I've learned since I've had a job that people end up in all sorts of incredible careers, and it's extremely hard to call it from your university desk. And so to a large extent, you just have to kind of pile in and have a go. And I think that definitely applies to investment, and it's important not to be put off by any perceptions, and often those are perceptions that this is a very quantitative career, or perhaps that it's a quite alpha driven kind of type A career as well. And certainly those people do exist, but there are a huge range of roles. And one of the really big important things for GAIN, but also for me now working with an asset owner, is great investors have diversity of thought. They have diverse individuals working for them, and they have different people who are able to challenge the status quo. And so that's one of the huge and important reasons that women and people from all kinds of diverse backgrounds should be considering this career.
Great. Yeah, so many ways to do it, so many different types of jobs and roles within investing. So we're coming towards the end of the panel discussion. We've actually got a question from one of the students anticipating what we like to, at a GAIN panel discussion, close on our final question for each of our panelists. And that is, what advice would you give your younger self? And Jessica, if we could start with you on that question, thanks.
Oh my gosh, that is so hard, and I'm very envious of the others having a bit more time to talk about it, just to think about it. I think here's something. I think something women really suffer with is perfection and feeling that they've got to be absolutely phenomenal at everything. And I'm sure a lot of you are phenomenal at everything. And I think they don't put themselves forward things because they're scared of failing or, look, investment is about getting more than half your decisions right. The guy who's sitting next to you who's super seems like he knows everything, over the long term, I've seen more of them blow up. So don't worry about being perfect. It's just about being, as I said, getting more than 50% of your decisions right. And don't mistake other people's confidence for greater knowledge.
Very good.
Wise words. Thank you. Orly, what would you say to a 20-year-old you looking for advice?
I think I would echo what Jessica just said, but I think I was thinking of something that in at least my early even up to recently, have more fun, like don't take it so seriously. And exactly the point of don't be worried to speak up or stand up for what you believe in. If you think it's right, it's probably right. And if you can explain and have a logic explanation, then at least give it a go. It doesn't, because what I've learned about through all my investment career or my professional career, there's no one answer to get to it. I actually spend now a lot of time with one of my colleagues, which is a brilliant person, but we have a different way of thinking. And we talk about for an hour of things that actually both are right. There's no right or wrong. And we try to think, okay, for this question, which route should we take? So this is not 0-1, even though it sounds like the investment are 0-1. It's a lot of logic, and there's many ways to look at the investment. And that's why diversity of thought is so important in this work. And understanding people, which I think women are usually better.
Yeah, very good. Honor of giving you the most time, but would love to hear your thoughts and what you would say to your younger self.
I completely agree that confidence is so important, and I think that would be my main piece of advice to myself, is to have a bit more confidence in my work and my opinions, and to seek feedback, and also when people give you positive feedback, take it in, listen to it, and then build on that.
Brilliant. That is a fantastic note to end on. And thank you so much to all of you, to our three panelists for joining. It's been, I found it incredibly inspiring and motivating. So I'm really grateful for your time. And I hope that everyone on the line agrees that this has just been a really fantastic discussion. So we're incredibly lucky to have such an experienced panel. Yes, Orly.
Quote. I want to make a quote. I think this month is important we make this quote, which is from Ruth Bader Ginsburg. Women belong in all places where decisions are being made. And I for me, it sums it all. And this is a person to inspire, so inspirational. We need many more of her. So let's take the younger generation forward.
Brilliant. And couldn't be truer. As you've said, Jessica, investors really are critical in actually changing outcomes and making the world more sustainable. So investment decision making is, if you want to have an impact, is a very good place to start. So in order to follow up on this, we would encourage you to become part of GAIN. You could join our network by going onto our website and signing up. It's gainuk.org. If you're a student and you want to get more involved, you get in touch that way. You can also follow us on Instagram at Girls Are Investors. And we'd love to hear from you. Any feedback on the panel discussion, anything that we can do to improve and inspire that next generation. We want to hear what you think. So thank you so much to everyone for joining, and very much look forward to seeing you soon.